The U.S. Northeast bracing for fuel shortages after the pipeline that brings its fuel was hacked over the weekend. It comes all the way down from Houston through Baton Rouge, all the way up the East Coast. This is a huge, huge deal, and something that I think a lot of people are scratching their heads about, how on earth we ended up in this situation. So gasoline futures, jet fuel as well, jumping pretty sharply on the back of this when we came in first thing Monday morning. That's starting to fade a little bit now. Kevin Book of ClearView Energy Partners joining us now to discuss what is happening here and in some ways why we're only getting this small reaction in the market that we're seeing right now. Kevin, great to see you along on the show. Let's just talk about how we ended up here. This is an incredible situation and something that people have warned about, talked about for quite some time. Yet here we are. The reality of it is now, and we're having to deal with it. Can you walk me through why there was no plan B here?
Well, I don't know that you can say there's no plan B. When you have a major fuel artery, the plan B is on the open seas. The plan B is on the open roads. There's other plans, and Colonial has been disrupted for other reasons in the past. But really, what we're facing is a whole new set of challenges, a whole new threat environment. It's not different than the same threat environment that confronts business every day. Cyber hacking is a risk for everyone. But the real issue is that whether or not the operational technologies, the back of the system, the part that runs the pipeline, were compromised, you still need the front of the system, the business systems, to run a business. So even if you're hacked in the front office without compromise to the secure system, you still have a problem. And we're living that problem right now.
Yeah, Kevin, I'm just really confused about the price reaction. Obviously a jump over the weekend, but just nothing in the market right now. Why?
The market definitely seems to be pricing in a very short disruption. Inventories were a little long relative to historical norms. You know, we can't use year-ago levels, but if we look back at 2019 comps, we had a few more days of demand cover in the East Coast. I think that there's been some signals out of Colonial. Their press release yesterday afternoon indicated that they had already started some lateral lines from terminals to distribution sites. But there's a lot of uncertainty still out there, and it is sort of surprising. I think that if you look at what it takes to get a tanker to come to the New York harbor, or for that matter, to pay the premium on a Jones Act tanker out of the Gulf Coast, you'd need a higher price than this. So the market does seem rather sanguine right now.
If there was a higher price, where does the fuel come from? I've seen some evidence that we are starting to see tankers that were heading down into the Gulf of Mexico, sitting tight. They've kind of stopped moving. They're waiting to see whether they need to head up to New York. How much capacity is there on the water right now if this went on for 2 or 3, 4 more days?
Well, so 2 or 3 or 4 more days brings some of the proximate cargoes, as you say, on the water in intermediate points between Rotterdam in Europe and also, of course, from the Gulf Coast into the New York harbor maybe a little sooner. But what you're really talking about when you're pulling incremental cargoes is diverting from other destinations, bringing new volumes from Europe, bringing new volumes out of the Gulf Coast into the Northeast. And to come from the Gulf Coast to the Northeast, that's a 6 to 7 day trip, maybe a little faster if you floor it. And coming out of Europe, it's about 10 days. So if we really have a protracted disruption, if it looks like this is going to be a severe incident, and I guess we'll probably know pretty soon, because if they don't say something, you'll probably get that conclusion, then those tankers will move.
Yeah. And also, Kevin, like when they say we have no idea, that doesn't really breed a ton of confidence. In terms of what the government can do, so they already are allowing truckers who are transporting fuel to drive more hours. A couple of things they can do, you mentioned it, the Jones Act, which basically means any fuel that's transported on ships around the U.S. needs to come from U.S.-built ships and U.S. crews. That's one thing they can waive. A biofuel requirement is one thing they can also waive. What do you think they're actually going to do, and how quickly are they going to do it?
Well, I think it's pretty telling that the first step they took was truckers and nothing more. If you look at what the other options are, the Jones Act runs counter to President Biden's very strong allegiance to labor unions and also the sort of Buy American principles that he espouses. If you look at environmental waivers, and there are many, they include things like allowing off-spec fuel to be sold or used. Others include the ethanol and biofuels waivers. Those also run counter to Biden's values.
Just a final quick question for me. refineries presumably have got a problem at this stage, in as much as they can't put product into the pipeline. What happens there? How much storage is there around those pipeline hubs? I.e., can the refineries keep doing what they're doing?
Yeah, storage fills up fast, so the system has to flow, and this really is the crux of the matter. You'll start to see divergence if you have this problem because prices will depress in Houston as they climb in New York. And you'll start to also probably see contracts fixing of ships for storage offshore. I think you're starting to already see some signs of that. And really, that's because the refineries are going to flow. They're not going to shut, and the product has to go somewhere.